What's up, everyone? Nicholas Thomas here with TrendyBest.com. At first glance, today looked like a rough day for technology stocks. The NASDAQ sold off, Alphabet got hit, and the immediate conclusion is pretty straightforward. Maybe investors are finally getting nervous about artificial intelligence. But the deeper I looked at today's market action, the more I realized that's probably not the real story, because underneath the indexes, something much more interesting was happening. Semiconductor stocks were moving higher, industrials were gaining, financials were catching bids, healthcare was strong, small cap stocks outperformed, and market participation was much healthier than the headlines suggest. I think today's market was sending a message, and that message wasn't AI is over. The message may have been show me who actually gets paid. The biggest story of the day was Alphabet. Shares came under significant pressure, dragging the NASDAQ lower. Alphabet reignited concerns surrounding artificial intelligence and the massive investments being made across the industry. Because Alphabet is one of the market's largest companies, the weakness quickly spilled over into other mega-cap technology names. Meta, Amazon, and Microsoft struggled. Several of the market's biggest winners over the past few years found themselves under pressure, and naturally, investors started asking, is the AI trade finally cooling off? But then I started looking underneath the surface, and the tape told a completely different story. If investors were truly running away from risk today, everything should have been weak. Semiconductor stocks should have been getting crushed. Small caps should have been selling off. Cyclical sectors should have been under pressure. Market breadth should have deteriorated. But that didn't happen. Instead, money appeared to rotate. And that's a very important distinction, because it suggests capital didn't necessarily leave equities. It simply changed addresses. And when capital rotates instead of exits, it's often telling you something important about investor sentiment. This is where things get really interesting. Several semiconductor and infrastructure related names actually moved higher. Memory stocks were strong. Semiconductor companies outperformed. Data center infrastructure companies found buyers. Think about that for a second. These companies sit right in the middle of the artificial intelligence ecosystem. If investors were suddenly bearish on AI itself, why were they buying the companies supplying the infrastructure? That doesn't look like an AI liquidation. It looks like something else. And I think the market may be wrestling with a very different question. For most of the past 2 years, investing in artificial intelligence has largely been one trade. The assumption was simple. The company spending the most money would eventually make the most money. Today's market action suggested investors may be becoming more selective. I don't think the market is questioning whether AI is transformative. I think the market may be questioning who ultimately captures the economics, who actually gets paid, because those are two very different questions. A technology can absolutely change the world while producing uneven returns for the companies building it. The world's largest technology companies continue committing extraordinary amounts of capital toward AI. We're talking about investments measured in tens and hundreds of billions of dollars. Data centers, compute infrastructure, power generation, advanced semiconductors. At some point, every investment cycle reaches the same stage. Investors begin asking, where are the margins? Where are the cash flows? What's the return on all this spending? And judging by today's tape, those questions may be moving closer to the center of investor thinking. Now look at the sectors that outperformed today. They all share something in common. Their economics feel easier to understand. Semiconductor companies get paid when chips ship. Industrial companies benefit when infrastructure gets built. Financial institutions offer earnings visibility. Healthcare had tangible company-specific catalysts. In other words, today's market appeared to reward businesses with more immediate and measurable outcomes. And right now, certainty seems to be commanding a premium. This may have been the most important signal of the day. The NASDAQ struggled, but market participation underneath the surface remained surprisingly healthy. Historically, true risk-off sessions tend to look very different. Technology falls, semiconductors fall, small caps weaken, cyclics sell off, everything moves lower together. Today's market didn't look like that. Today's market looked like rotation, and rotations matter because they often reveal what investors are becoming increasingly excited about and what they're becoming concerned about. I think the hidden story driving today's market is this. Investors still appear to believe artificial intelligence will reshape the economy. They still appear to believe massive AI spending is coming. They still believe infrastructure needs to be built. But they may be becoming increasingly selective about who ultimately benefits economically. The conversation may be shifting from will AI change the world to who gets paid, and judging by today's market action, that appears to be the question. Markets often whisper before they scream, and I think today's market was whispering something interesting. Not that AI is breaking, not that the AI trade is over, but that investors may be beginning to separate AI spending from AI profits, and if that's what this market is starting to focus on, it could have major implications for leadership. I'm Nicholas Thomas with TrendyVest.com. If you enjoyed this market recap, hit the like button, subscribe to the channel, and let me know in the comments, who do you think ultimately captures the economics of AI? The builders, the suppliers, or the companies that eventually use AI to improve their businesses? And before I go, a quick disclaimer: the information in this video is for educational and informational purposes only. Everything discussed here reflects my personal observations and opinions and should not be considered financial, investment, legal, or tax advice. Always do your own research and consult with a professional. Thank you for watching, and I'll see you in the next video.